my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual at this time of year, I stop looking at my daily charts and instead concentrate on the longer term view, using my weekly, monthly, even yearly charts. If you'd like to discuss any of these, I'd only be too happy to hear from you. So let me now introduce today's longer term chart.
Today I'll be looking longer term at euro against the US dollar. The move down in November 2021 was seemingly innocuous, but it was the start of an action that has only really started finishing this past November, fully 2 years on. Back then, the move down was the first move below all the moving averages since April 2020, and it led to the development of two new patterns, originating back as far as the end of 2016. The first and simpler pattern was the end of 2018 to April 2022 sideways triangle, which I have highlighted in dark blue on my monthly chart. It's made up from the February 2018 to date downtrend, currently at 120.88, and the April 2017 to April 22 broken uptrend, currently at 110.68. I've kept the uptrend alive despite being properly broken because, in conjunction with the 5-year moving average, which is currently at 110.88, and the 50% Fibonacci line of the 2018 to 2022 move at 110.45, these have acted as a cap on the reactionary moves back up we saw in 2023 and 2024. The second and more complex pattern was the April 2017 to April 22 cat's ears pattern. Now, this is effectively a double top formed over that period, but one that is inside a declining market. The sideways triangle had a primary target that was achieved in July 2022, but it still has a much harder to reach target X2 down in the 86.05 zone. This is also not too far from target X2 in the 87.15 zone, the target for the cat's ears pattern. The initial effort lower in late 2022 did not reach down to those lower targets, forming instead a V-bottom in September 2022 down at 95.34. Now, looking back, I did find some congestion starting at 9600, stretching from the highs back at the start of 2001 and mid-2000, all the way down to the 8400 zone. However, these do not look that strong and were not nearly enough to cause a V-bottom, so I was a little perplexed as to why it happened. It's also another reason why I kept the broken uptrend still in good order because, as I said at this time last year, and I quote, "I suspect we may be seeing the beginnings of overhead resistance appear from this broken uptrend, which may soon be reinforced by the 2018 to 2022 50% Fibonacci line at 10.45. You see, the uptrend crosses the 50% Fibonacci line in August 2024, thus the targets X1 and X2 can still be seen as live despite the recent rises in 2022. End of quote. I also pointed out back then something that has come about during the course of this year and is to do with the V-bottom formed over 2022. And I quote, V-bottoms. Well, V-bottoms sometimes make an extension or a shelf, if you like, sometimes into a bull flag or pennant shape, and sometimes these secondary bullish patterns fail. Thus, an extension or V or shelf would tie in with the possibility that the broken late 2016 to date uptrend may be the instigator for such a pattern. We'll have to wait and see how this develops this year, and that's the end of the quote. Well, since mid-2023 to November 2024, we have seen exactly that, an extension or shelf being formed roughly between 105.70, the 50% and the 50% Fibonacci line at 110.45. It's only this past month of November that we have seen the possible start of a break out of this shelf. It's early days yet, but it looks like we may see the beginnings of a long-term break low, and thus the previously mentioned support seen at the turn of the century will now be watched carefully by me, as well as the opportunities for any move down to targets X1 below at 86.05 and target X2 down at 87.15. Watch this long-term space.
Thank you for watching and listening. This annual broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.